Is this the BOJ attacking the credit channel, or is this the BOJ attacking the FX channel?
Well, it's trying to attack, I think, the credit channel, given that the FX channel didn't work. And FX is responding because you could make the case that it's liking the fact that they're not going very aggressive on the negative rate, which ended up being quite positive for the yen. But I'm skeptical how powerful this is going to be in terms of being able to push dollar yen higher. To us, dollar yen is all about the real rate differential that has versus the US, and that has collapsed over the last few months because inflation expectations have been unwound in Japan. People have stopped believing in Abenomics. They've stopped believing that the BOJ has more tools, and I think that meeting earlier this year when they cut rates and you got this reaction was incredibly important for the market because it changed perceptions about central banks.
George, we seem to be having an echoing from the ECB's line. Of course, they now no longer really seem to be targeting FX, or indeed seem to be trying to say they don't target FX. They now target credit. Now that you've got Japan targeting credit, are we going to start to see the call on fiscal stimulus coming from Japan as well, as we've just heard from the ECB loud and clear?
Well, I think we will. We are likely to get fiscal stimulus out of Japan. Obviously, you've got the question of the increase in the consumption tax, and that decision is meant to take place over the summer. I think it's very likely they delay the consumption tax increase and potentially do a supplementary budget. The interesting question is how big will that be? There's a range in terms of people's estimates of anywhere between 3 trillion to 10 trillion. But I think if that fails, if it doesn't work, if it's too limited, we will soon shift to talking about helicopter money, particularly if there's a big negative shock to the economy over the next year or so.
It was interesting listening to James talking about the fact that the ECB and the BOJ have got, in some ways, very different problems that they're trying to deal with in terms of the debt story, the desire for debt, the demand. How comparable are the policy frameworks that these two central banks are putting in place at the moment? Draghi tells us we need to be patient, yet you're hearing from the BOJ kind of hurry up. So you're getting wait and you're getting hurry up. Where are we?
Well, I think there's the similarities and differences. The difference is that the ECB is slightly before the BOJ in terms of the extent to which it's exhausted its monetary policy toolkit. So the ECB, there's still quite a lot of risk premium European fixed income. It can buy more BTPs. It can try and push the currency weaker because it's not as expensive as dollar yen was. So the difference is the ECB has more policy scope. The similarity is that eventually, if that doesn't work, they will end up in a similar position to Japan, where they'll run out of the tools, and inflation expectations, like Japan, are still pretty weak.
Yeah, you look at the 5 years. In fact, they've been going in a negative direction. Been great to see you this morning. Probably not enough time with you, but we'll be very interested in seeing you again. George Saravelis joining us from Deutsche Bank.